Hey, what's up guys, John here. For over 200 years, Swiss banks have been the bedrock of financial stability. Millionaires, billionaires, and politicians from all over the world would go to Switzerland and open up Swiss bank accounts and put their entire fortune on that land.
Because taxes are so low and financial control so minimal, it's also a great place to hide money.
It is the bank that helped clients break the law. Now HSBC's secrets are out.
And the reason for it is there's a lot of secrecy laws. The stability of that banking system has always been very strong. It's been one of the safest banks and banking systems in the world.
Under what circumstances would you be obligated to cooperate with an FBI or U.S. Justice Department investigation?
Whether America plans to invade Switzerland in the coming months.
But now when you look at what's going on, they're talking about preventing people from getting out their own money. They're talking about preventing bank runs, putting on exit taxes where people can't get their cash out. They'd have to pay a massive fee to be able to access their own money. What if I were to tell you that they're talking about very similar policies here in America? Janet Yellen, in fact, came out just a couple days ago. Public information on treasury.gov I'm going to share with you in this video about what she's got planned for us here in America. So I'm going to break it down for you. I'm going to show you what's really going on, help you and position you for, the new normal. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate other people about what's really going on. And if you'd like to fix your credit to position yourself for a world of uncertainty, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description below this video. Schedule a free strategy session. Take a look at this. So, in the past 3 months of 2022, the bank, at the time, Switzerland's second largest lender, was hit with $123 billion in outflows. Another $61 billion in the first quarter of 2023 with the wealth unit, which caters to affluent clients at the hardest. Its near implosion prompted the Swiss National Bank to step in with emergency funding and to facilitate the takeover of UBS, making the country's biggest bank even bigger. While in its early days, the measures under discussion in Switzerland are making some people nervous, the risk penalizing Swiss banks if they were to introduce in only Switzerland, one of the sources said. UBS is trying to attract customers with above market rates for their deposits, Reuters reported in October. The new rules could dent competitiveness or, in a more extreme scenario, push clients to withdraw their money preemptively, the person added. Well, here's what they're talking about doing here. So, first, 9 million residents in Switzerland. 800,000 of them are millionaires. Think about that. 800,000 millionaires out of 9 million residents. So much money, so much power is sitting in Switzerland. And when they start to bring forward these restrictions, you're going to start seeing the floodgates open up. Or potentially, you're going to see a lot of people just being stuck, not being able to access their own money. Right? They're talking about restrictions, rumors are, around $50,000 a year. But who knows? Let's see where this actually goes. You look at what they're saying, you look at the chain of events that have happened since Silicon Valley Bank. In 2022, they've been setting the stage for this. This isn't something that's just randomly happening. Here, Bloomberg, Swiss authorities, and some of the country's lenders, including UBS Group AG, are in talks about new measures to prevent bank runs, Reuters reported on Thursday. The discussions are also part of a broader review of the country's banking rules and would be designed for Switzerland's top banks, according to a report. One option under discussion is staggering. A greater portion of withdrawals over a longer period of time, the report said, citing more. Imposing exit fees is another. It citing two sources. UBS took over rival Credit Suisse in a government-engineered rescue operation in March after a smaller bank was pushed to the brink of collapse by a wave of clients pulling their deposits. The speed of the withdrawals surprised many banking experts, including regulators in Europe. The crisis led to a wider examination of the rules governing bank liquidity requirements. The European Central Bank was planning to tighten how it monitors liquidity, with weekly reports from lenders breaking out funding by maturity and the type of clients. So you think about this. Switzerland, they attract a completely different demographic than America, for example. America, we're a consumer-based society. People depend heavily on credit. People are living paycheck to paycheck here. Many of them are in debt, and most of that debt is held by banks and financial institutions. So, if you think about what's going on in Switzerland, it's a completely different type of consumer they're dealing with in Switzerland than they're dealing with in America. So the stresses that are happening there, you can only imagine what's really going on here. You had Silicon Valley, First Republic, PacWest getting acquired by Bank of California. You had a bank that failed just a week ago. But when you start to look at what's happening It's really, really obvious that this is coming here. Switzerland faced a full-scale bank run if Credit Suisse went bankrupt, right? So imagine they're positioning the government saved the day, right? The government is the one that came in and saved the day. This is the conversation, right? So U.S. seeks a stymie bank run risk. Yellen pledges protections. The government's coming to save the day, right? This is the conversation. Treasury Secretary says not looking for bailouts for investors. Race against clock aims making deposits available Monday. This came out in March, right around the same exact time, right? So this came out right around the same exact time. But let's look at what just came out on treasury.gov. I'm going to pull this down so you can see the URL, treasury.gov, home.treasury.gov. And what they're saying here is remarks, and this is November 3rd, just a couple days ago, remarks by Secretary of the Treasury Janet L. Yellen at the open session of the meeting of the Financial Stability Oversight Council. Goes on to say that our first agenda item is to discuss and vote on the Financial Stability Oversight Council's analytic framework for financial stability, risk identification, assessment, and response, and on the Council's interpretive guidance on non-bank financial company designations. Before we turn to the presentation, I'd like to explain why I believe it is so important the Council to achieve greater public transparency, analytical rigor, and how these two documents will help the Council do so. Financial stability is a public good. The U.S. financial system enables people to make payments, build businesses, save, I'm not sure about save anymore, and manage risk. To fill our needs, it has evolved to the complex, diverse, and interconnected. We rely on it every day, and it has succeeded in supporting American families and businesses, enabling wealth creation and economic growth over generations. But when it falters, we can experience financial crisis that can devastate households and businesses for years afterwards. This is where the Council, or FSOC, comes in. Congress created FSOC after the global financial crisis to identify and respond to risk in the financial stability. To maintain the strength of the financial sector, we need a nimble and more robust structure to monitor and address buildups of risk that could threaten the system. In the lead up to the global financial crisis, inadequate oversight led to reckless risk-taking. When large interconnected financial companies failed in 2007-2008, stress spread through the financial system and then to the real economy. Then reforms implemented after the crisis substantially strengthened the financial system, and the banking system as a whole remained strong. But recent stresses of financial sectors arising from onset of the pandemic and sudden failures of some regional banks underscore the continued need to remain vigilant to threats to ensure the resilience of the financial system and our economic strength. Now, I'm not going to read the whole thing, but what I'm going to show you here is at the end, it says, in voting to adopt the analytical framework and guidance, we will increase the transparency of the Council's work and establish durable process for the Council's use of the designation authority, strengthening the Council's ability to promote a resilient financial system that supports Americans. So you think about what they're saying. Strengthen the Council's ability, meaning giving them more power, more authority to promote their resilient financial system that supports Americans. So look at it. Look at the writing on the wall. You have Switzerland doing what they're doing, right? You have America, everything that's happened, the conversations of bank runs that were happening all throughout social media. What could very likely happen is going to change world history. It's going to change the world. Because if we see a situation, which I think is very, very likely, a black swan event, you look overseas, you see one war after the next, you see one crisis after the next, you're looking at these bank losses that are mounting. I mean, there's discussions of 1.8 trillion just in American banks that are lost, right? Over $650 billion in losses just in their bonds. I mean, you look at what's going on there, it's unbelievable. It is unbelievable. And I think that we could see a situation where, bank runs or bank limits or restrictions could greatly come. Because when they're talking about this, on the treasury.gov website, they're saying that this is what needs to come. They've been planting this seed for 6 months. It's not crazy to think that what they're saying is probably what is likely going to happen. Because at the end of the day, they plant these seeds for a reason. This conversation is happening for a reason. Because it's normalizing the insanity that they could step in and say, you can only get out so much. How does a business function if you can't get access to your money? How do you pay the bills in which you've committed to paying? Your car, your loans, how do you function? right? You don't. Unless one has access to freely deposit their money in and withdraw their money at any given time, the trust of the banking system is going to get evaporated. What do you think of this entire situation? Do you think we're walking into a situation where Switzerland is going to do this? America might do this. You might see this happen in all these different countries. Are we walking into a situation in which we're going to walk into a crisis unlike anything we've ever seen before? I'm curious what you think. What do you think is going on in Switzerland? What do you think could happen here in America? Drop below. We'll have a conversation about it. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. And I'll catch you guys in the next video.